Hey everyone, welcome back to the channel. It's 2026, and the financial landscape is shifting faster than ever. If you're watching this, you're already ahead of 90% of people because you're thinking about your future self. Today, we are settling the ultimate debate: the Roth IRA versus the 401k. Which one is going to actually make you a millionaire? And more importantly, which one keeps the government's hands off your money? Let's dive in. Before we get into the nitty-gritty, we have to talk about the tax bridge. At its core, the difference between these two accounts is just a matter of when you pay the IRS. With a traditional 401k, you get a tax break today, but you pay later. With a Roth IRA, you pay taxes now, but every single cent you grow is tax-free forever. In 2026, with tax rates projected to rise, that tax-free label is looking like a literal goldmine. Let's start with the 401k, the heavyweight champion of the corporate world. The biggest reason people love the 401k is the employer match. If your company offers a 3% or 5% match, that is an immediate 100% return on your money. You will never find an investment on Wall Street that guarantees a 100% return on day one. If you aren't hitting that match, you're literally leaving a pile of free cash on the table. In 2026, the contribution limits for 401(k)s have adjusted for inflation, allowing you to stash away a massive amount of capital upwards of $23,500 or more depending on your age. This is the 401(k)s greatest strength, volume. You can shovel money into this account much faster than a Roth IRA. If you're a high earner looking to lower your taxable income right now, the 401k is your best friend for staying out of those higher tax brackets. But wait, there's a catch. Most 401k plans are limited to a small menu of mutual funds chosen by your employer. Sometimes these funds have high expense ratios, basically hidden fees that eat your soul and your profits over 30 years. This is where the Roth IRA starts to look like a much sexier option for the savvy investor who wants total control over their portfolio. The Roth IRA is the freedom account. Because you're opening this at a brokerage like Vanguard, Fidelity, or Charles Schwab, you can invest in literally anything: individual stocks, specialized ETFs, or even Bitcoin ETFs. There's no boss telling you what funds to pick. Plus, the Roth IRA has a secret weapon for 2026. You can withdraw your contributions, not the earnings, but the money you put in at any time, tax and penalty free. However, the Roth IRA has two big hurdles: lower contribution limits and income phaseouts. You can only put a fraction of what you can put into a 401k. And if you make too much money, the government says, sorry, you're too rich for a Roth. In 2026, those income limits are strict. This is why many high achievers turn to the backdoor Roth strategy, but that's a complex move that requires a very careful touch. Now, let's talk about the 2026 tax sunset. Many of the tax cuts we've enjoyed over the last decade are scheduled to expire or change. If you believe that tax rates will be higher in 10, 20, or 30 years, which, let's be honest, look at the national debt, then the Roth IRA is the mathematical winner. Paying 22% tax today to avoid paying 35% tax in the future is a trade you should make every single day of the week. So, who wins the battle? If you're in your 20s or 30s and your income is still growing, the Roth IRA is usually the powerhouse. You're in a lower tax bracket now than you will be at the peak of your career. Getting that tax-free growth compounding for 3 decades is how you end up with a 7-figure nest egg that the IRS can't touch. It's about building a fortress around your wealth. On the flip side, if you are a high-level executive or a business owner in your 40s or 50s making $200,000 plus, the traditional 401k might be the smarter play. The tax deduction you get today is worth a lot more when you're in the top tax bracket. You're saving 30-something% on every dollar you contribute. That's an immediate win that you can reinvest elsewhere, like a high-yield savings account or real estate. But here is the pro move for 2026. You don't actually have to choose just one. The most successful investors use a hybrid strategy. They contribute to the 401k just enough to get the full employer match. Remember, that's 100% free money. Then, they pivot and max out their Roth IRA to get that investment flexibility. If they still have money left over, they go back and fill up the rest of the 401k. This hybrid approach gives you tax diversification. When you eventually retire, you'll have a bucket of money that's taxable, your 401k, and a bucket that's tax-free, your Roth IRA. This allows you to manipulate your taxable income and retirement to stay in the lowest possible bracket while still spending as much as you want. It's like being the architect of your own tax code. One thing I want you to watch out for in 2026 is the target date fund trap. Many 401(k)s automatically default you into these. While they are safe, they often have higher fees and can be way too conservative for younger investors. If you're under 40, being too conservative is actually a risk, the risk of not having enough money to retire. Make sure your asset allocation matches your goals, not just your age. At the end of the day, the best account is the one you actually put money into. Whether it's a Roth or a 401k, the math only works if you stay consistent. Start today, even if it's just $50 a week. Future you is going to look back at this moment in 2026 as the day the trajectory of your life changed. If you found this helpful, hit that subscribe button and drop a comment below. Are you Team Roth or Team 401k? Let's talk about it.